Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have two of my very good friends, both Kevin Kwong and David Yeow. Both Kevin and David run Tradewind Investments. It's a multivariate derivative hedge fund that specializes in not only the current economic situation, but the future economic situation that we're headed to. So Kevin, David, welcome to the show.
Hi, Ryan. Thanks for having us.
Yeah, thanks for being here. So, guys, I've gotten to know you a little bit, and I can tell you with certainty how impressed I am with your current fund and the performances that you guys have been able to generate in such a short amount of time. We're going to get into that. You guys are going to tell us everything. Well, maybe not everything. You got to leave some secrets in your pocket. But, how about we open it like this? How's the market doing? How are you guys doing? Bring us up to speed with the current performance of the fund.
Yeah, David, you want to take this?
Of course. Yeah, I'll be glad to. So, we know this is probably one of the worst start of the year for S&P 500 since the Great Depression. I believe This is the second worst start of the year. It's down. The S&P 500 is down 18% year to date so far. We're doing well. We're doing as designed. We're up, our funds up, 15% right now, and it continues to go. We haven't had a down month the entire year, and it's working as designed. We our philosophy is having no drawdown or low drawdowns with consistent growth, and we like to compound that, for our investors over the years. And one of the most rewarding thing right now is we got off a call with a doctor that is one of our investors last Saturday.
Yeah.
And he asked about the market. He's like, hey, how's the market doing? I haven't looked at it in months because I'm invested with you guys. And that means more to us.
Yeah.
And he's like asking, how do I put in more money? And so we had to give him the forum and all that. And that's really what we are about. When we designed the strategy and the product, and it's good to have that peace of mind for our investors.
Holy smokes. So, okay, let's unpack everything you just said. That was a lot of amazing things that you just rolled up into like 3 sentences. So super impressive. So number one, okay, so let me make sure that our listeners understood that, and myself included. So what I heard is the S&P is down 18% and your fund is up 15%. Is that right? Over the same period?
15. Yep. Up. Yep. As of the end of last month, we're up 15.
What? So, okay. I mean, I shouldn't be surprised, but I'm more impressed. I would be happy. And I think when the market's down 18%, I'd be happy to be down 10%. And I would be ecstatic if I just didn't lose or make, if I just broke even. But you guys go, not only do we mitigate the downside, not only do we help you to even just break even, we give you a return. When everybody else, as we say the metaphor, there's blood in the streets, you guys are doing well. You and your investors are eating very well. So absolutely incredible. And the second thing that you said is like, hey, we've got investors who, from what you said, I'm totally putting words in your mouth, they're happy. They're not even looking at the market. That tells me how much trust that a lot of people have had for you and have for you, your investors currently. And they're not even looking at it. They're like, I don't know, it looks awesome to me. How do I give you more? That's a nice problem to have. Maybe you teach me your tricks of the trade there to do that. So super impressive. Yeah, it is a good feeling. And guys, like that's absolutely amazing. Thank you for sharing that. In true form, why don't you tell me a little bit about, what, now that you kind of begin with the end in mind, how did you guys meet? Like, how did Tradewind come to be? How did Kevin and David connect and combine their superpowers? Walk us through a little bit of the origin story and give us, me and the audience, a better sense of where it all began for you guys.
Yeah, I'll take this one, David, if you don't mind. And then you can obviously add whatever you have to.
Sure.
So we didn't know each other for too long. So we met actually last year in 2021 around March. And where we met was we are part of an elite trading group. And what that means is people share different trade ideas, and we kind of critique or just look at different ways of people doing things. Right. And particularly, David posted one that because the normal way of selling put or selling wheel strategy is to sell out of the money or far out of the money. So you have a high chance of winning. But what David was doing was he was selling in the money put on a particular stock, and then I reached out to him and I was like, "What's going on? Like, how do you?
Are you
Like,
crazy?
what is
Yeah.
this?" Yeah, and then I honestly thought he was crazy. He was just gambling. But and then what he told me made a lot of sense. So ultimately, it's just really the risk and reward and the premium you get and whatnot. I would say everything up until the fund launch, the star has to align.
Yeah.
So we had multiple different scenario that if one of us has said no or one of us did something, then this wouldn't happen. So I'm grateful that everything have happened according to, I guess, fate, you can say.
Yeah.
But essentially, we just met last year online, and then we started talking, sharing different ideas, and I share my trading through 2021 and throughout. Basically, from March to May, if you remember, Ryan, it was a really bad time for the market. So David was struggling. So I was like, hey, this is what I'm doing. And then I'm constantly bugging him while he was too, I guess, scared or afraid to look at his portfolio. Right. But what I would do is like, hey, I made a couple $100, I made a couple $1,000. And then slowly he's like, oh, okay, maybe I'll look at this strategy. So that's basically all it started. I shared the strategy and then incorporate his technical expertise in terms of the technical analysis, market profile, and we improved the strategy from typically 50% to like honestly 70 to 75% win rate now with a remarkable risk and reward ratio too.
So, whoa. So you guys, sorry, you keep shocking me with all these like cool stats that you guys do. So what I hear is at the height of COVID, everybody's locked down, right? And I'm assuming, you started a fund ultimately, which is starting a business. And I hope that many of our listeners are picking up on this, is that even in the height of COVID, you started an investment business. Everybody's freaking out. And in fact, if you do some studies, which I'm sure you guys have, a lot of the biggest funds that we know today all started in a recession or in a very difficult market, and they were birthed into existence. And now these are Goliath funds. So, if that's kind of an omen of where you guys are headed, it's certainly not a far stretch. So here we are, height of COVID. You guys meet up, you start exchanging notes, and, both had strategies that were kind of working, is my understanding of what I just heard. But then you guys combine your superpowers, we'll say, in trading in the market, develop a strategy and go, I believe you said, from a 50% win rate to more than 75% win rate in your combined strategy. Is that right? Right. Okay.
Win rate is great, but we also have to look at the risks and all that. So we incorporate a lot of risk management into the strategy as well.
Yeah.
And that's important to note. And I'll let David start his background, because that's also where the stars align. Because why is risk so important, right?
Exactly. So David, my goodness, you have such a unique background. So you go from, I think you just told me you were an art major. You were critiquing my artwork that my wife kind of loves in the background. And you're saying, oh, that's a really interesting piece. And I was like, wait, I thought you were a pharmacist in a previous life. So you started out as an art major. You wanted to work at Pixar. Then you turned into a pharmacist and then a fund manager. I mean, I'm sure me and the rest of the audience, we got to hear this.
So I went to college, went to the University of Buffalo with an art major, as my primary intent.
Yeah.
And after the first semester, I started looking at, what do I really want to do? And, and I joined a couple of fraternities, and, I had some people, some of the other brothers at the time were kind of convinced that I couldn't get anywhere in life, and I had to prove them wrong. So I put summer and winter classes. I got 8 semesters of 4.0, and I applied to a pharmacy school with 140 slots, and I got in after with 1,000 applicants. I got in, and
sure,
the rest is history. I worked as a pharmacist for over a decade now.
Yeah,
and I just sort of retired from the healthcare profession last November to focus on the hedge fund. And over the years, I've a lot of my trading, a little bit background. I started trading option in 2008.
Okay.
After I saw my college roommate paid off his tuition using option trading. So I started peeking around, started with spreads, and then got into more complicated stuff over the years. But I've always only been able to trade bull market.
Yeah.
And bull market, and I would get out and I would wear a different hat, become a real estate investor. So, and I would go buy businesses, and I would work three jobs. Like I would trade in the morning, go to my day job, and then work with my other side hustle at night until midnight. And the biggest trigger for me was my event horizon was my son being born, and part of me always wanted to start a hedge fund.
Yeah,
but I just didn't have a strategy that could survive the bear market or be comfortable handling other people's money. So, and when Kevin says the star has the line, it truly does have to, because I was making good money trading the COVID bull market, and it was the best time because I wasn't really doing wheel strike. I was doing synthetic, which is almost double betting on a bull market. And when it goes south, it can kind of hurt a little bit. I've had ups and downs, and that's what kind of makes this combination of teamwork really unique. Is I have a lot of experience with bear market, and Kevin has the strategy and the the knowledge and the tenacity to trade and back test and all that.
So, and I would argue that you both have both the tenacity. I mean, here you were working 3 jobs, you had a new son, and you're hustling, right? I don't know if this is the right term, but a serial entrepreneur. But would you say that during this time, I would call it a discovery phase for you as you're growing into who you are now? Would you say that there was something like an inner calling, something driving you to say, hey man, I know I'm going to be successful. I mean, you were in school, you were in many other aspects and everything to this date. Do you feel like there was something deeper that was just driving you forward and then almost drove you and Kevin together? Sounds like a romance novel, but one with a lot of money at the end.
Yeah, it truly is. If it wasn't for him, we were just talking about it this week. What would we be doing right now if we didn't have the fund? And what product would we be trading? What strategy would we, we really probably didn't, be just working on jobs.
Yeah, you'd be successful in whatever that means. Right. And you're successful now. I would say a market down 18%, and you're destroying it by being up 15%. That is absolutely crazy. So
it's a really good feeling when what you work so hard to design and put together is actually panning out the way we want to. And it wasn't for Kevin being so persistent in showing look at when you're in pain, look at what I'm doing, and I didn't really pay attention to it until his consistent, communication with me. And I was like, you might have something here. Let me take a look at it. Yeah. And then that's when we put our own money and we tested it for a while, and it had the consistent results. And I'm like, oh my God. Yeah. So that's when I called him and I was like, hey, we got it to the point where I'm comfortable managing people's money, and I think we'll look like Rockstar next year. Yeah. And do you want to start a hedge fund? And he was a little hesitant as well. He just said no again.
I did say no initially. I was like, I'm good. I make good money by myself. And then a week later, he asked me again, and I was like, well, maybe there's something, right? So
that's awesome. Yeah. So here you are in height of COVID. You're testing strategies, also different business models of do we just do it for fun like we were, or do we really take this serious? And so you guys obviously found out at some point that you're really onto something, that you really do have a strategy. And from those results you said in the beginning of the show, I would say, yeah, that's an understatement of a lifetime. So you go from pharmacy, then you guys meet. And, Kevin, maybe you can walk me through a little bit of your origin story. How did you become to be so darn good at this? We know how David did, but maybe you can fill us and our listeners in so we better understand where you're coming from.
I was just born this way,
Yeah.
No, that's kidding. So
I love it.
So half jokingly, my dad, so one thing unique about my upbringing is my dad's a professional gambler.
Oh.
So what that means is he gambles for a living.
I swear you
And
guys get cooler the more we talk. This is awesome.
so I've never seen him work a job. And growing up, you ask kids like, "Hey, what do you want to be when you grow up?" I honestly, but I shouldn't say this out loud because sometimes security questions will ask, "What do you want to be when you were young?"
Mhm.
And I have business person as my answer when I was young.
Nice.
So anyway, so ultimately, I grew up in Hong Kong.
Mhm.
I went to high school, did all that there, and when I was 18, 2008, I opened up my brokerage account in Hong Kong, and I started trading, doing different derivative strategies, options,
Sure.
stocks. From there, I went to college studying economics in the U.S.
Yeah.
That's where I first got exposure to the U.S. market and a little bit of the options. I was primarily still focused on the Asian market because that's what I was familiar with. Then I decided to give the U.S. market a shot. And that I dove really deep around 2020, 2021. And that's really where I started. And by trade, I'm actually a business insurance underwriter. So what that means, I help large businesses underwrite and look at their risk. So all I look at is the worst case scenario and how much it will cost to do it and how do you protect that risk.
Wow.
So because of that background, and along with David as a pharmacist, all we care about is the downside and the risk management.
Sure.
And through that's why we came up. We didn't really come up with the strategy itself, but we came up with the way to manage the portfolio and to really trade the strategy on a higher win rate and lower risk method. So the risk 1 to make 2 is always our way of trading.
Yeah.
Essentially, you only need, with slippage and whatnot, 40% is all you need. So you can flip a coin, and if you get 50% of the time, you still make money.
Right.
But the key is how do you generate market bidding return through that. So that's where David's technical analysis, market profile, and really the short calling really comes into play. And
Nice.
One thing I'll say about David, he didn't mention too much, is like he grew his portfolio during the COVID time, 10, 15x from the low of COVID.
Man.
So that's how crazy some of the picks he do and how impressive he was when it comes to picking stocks and whatnot. Not that we are doing stocks and whatnot. In the bear market, we don't play that. Right now, we are doing regardless of what the market is doing, our goal is to make that consistent income.
10x during COVID, so everybody's freaking out, and you're just like feet up on the desk. You're like, I'm good. I'm doing good. Good for you. Holy smoke! So 10x, that is absolutely incredible. Good for you, man. So here you are. You guys came together in different ways, and you aligned your strategy. You went from a 50 to a 75% win rate, and my opinion is you guys are only going to be getting better. So now you guys started your first fund, Tradewind, came right out of COVID. You guys are building 10x. You guys have back tested like a lot. I know from talking to you guys, you did a lot of back testing. You really confirmed your strategy. You are not gambling, right? You're not following in your father's footsteps as far as gambling, but you are from a professional standpoint. I would certainly call you guys professionals. So that being said, here we are, Tradewind, right? We call it a multivariate fund. So you guys have a certain strategy, a derivative strategy, options. Some people call it options as well. Maybe walk us through. You mentioned that your strategy focuses on covering downside risk. So maybe paint a little bit of a picture here. Give us some color on your strategy and why the heck does it work so good?
Yeah, just real quick. Everything for us is based on expectancy, and we learned a long time ago and through different professionals. It's all about the math, so to speak, in terms of if it's a winning strategy and based on math and backtests and the statistic, just like gambling. The term gambling is a little bit misleading.
It gets a bad name. Yeah, you're a statistician. Right. You're playing the odds.
For sure. So my dad, the gamble, so to speak, but it's a positive expectancy, so to speak. So that's awesome. Kind of how we structure everything. Yeah. And to answer your question, the main strategy we have right now at Fund One, the main strategy is the intraday strategy.
Okay.
We're going in and out in the same day, and we're really capturing the massive theta decay or the premium decay. And Fund Two would be similar, but it will be a longer horizon. David, do you want to add a little more?
Yeah, I mean, we try to capture about 1% gain a day, and when the idea is to be able to consistently, repeatedly do it, and in a way that I wanted the strategy to. We don't even want to compare the benchmark. I think the one we always talk about, we want to be better than last year.
Yeah.
So we compared ourselves, and we want a product that can be, for our investor, it just means that they don't have to worry about inflation. They don't want to have to worry about cash flow. It's a liquid fund. So they can put in more, right? And they can, they can kind of retire without having to worry about massive drawdown. Especially right now, it's a really critical time to be having this massive drawdown. A lot of people are at the retirement age. You could see it in the job reports or whatnot. So we wanted a product, a fund that could kind of give people peace of mind and really have that consistent and high return with low risk. And through compound growth, they will be able to double, triple their money in 3 years to 5 years or whatnot. And I sold my house in 2018. I have my entire net worth in the fund, and my 401k is gonna. Yeah, I quit my job. My 401k is going to second fund. So you have to, a lot of the Wall Street guys, they don't put money in their own money into what they trade. We do.
And I think that's one of the things that impressed me. One of the many that impressed me about you guys is you got skin in the game. Like this isn't just the classic. You hear these gurus who aren't gurus that say, "Hey, OPM, use other people's money," and you're like, "Well, yeah, but." What a lot of investors respect is say, "Hey, you've got your neck on the line as well in this investment." And I think a lot of investors respond to that because it's almost like a hedge. When I look at placing investments with my own capital, I want to know, like, hey, how motivated are you? Like, if you got skin in the game, okay, right? I can tell you guys are going to do whatever it takes, especially when you sold your house, your 401ks on the line. But you know what? You're doing pretty good when the market's down 18%. You're up 15. That's absolutely phenomenal. So, you focus on this, we'll say, asymmetrical risk to reward. And, in talking to you guys earlier, two of the metrics that you really pay attention to, at least in Fund One, you said they're similar strategies, but one's short, one's a little bit longer. But in Fund One, my understanding is you do pay attention to two metrics that our listeners might be interested in learning about. One is Sharpe ratio, and the other one is Sortino ratio. Can you walk us a little bit through how that plays into your strategy and anything you'd like to add to that?
Yeah, primarily Sharpe ratio really is the measure of the per unit of profit to per unit of risk.
Yeah.
So our typical Sharpe ratio on a monthly basis is between 4 and 9, and that
monthly.
Monthly Sharpe ratio. So that's the above average typically, right? And how we achieve that really is the risk and reward and the risk management itself.
Correct.
Like we learned a long time ago, it's not about how much you make, it's about how much you lose. Yeah. Because David likes to talk about this too, is if you can control the downside, making money is only a matter of time.
Yeah.
So especially with high win rate strategy. So
it's beautifully said.
So yeah, I think that's really the primary focus of both funds, really.
Oh man, so a Sharpe ratio up to 9, so a 9-to-1 odds. Yeah, I'd take that deal any day, man. This is awesome. Yeah. So back when I was a young man, one of the things I always took pride on is getting in a door, and so I was fortunate enough to hang out with the man himself, the Oracle of Omaha, Warren Buffett. So we went out to, when I met him. It's crazy. Maybe that's a topic for another show of how I actually got to have dinner with Warren Buffett at some like random Greek steakhouse in Omaha. It was hilarious.
And did you have to pay him a fortune?
No, I didn't pay him a dime. So I did it at no cost, but I know a lot of people will pay like hundreds of thousands, if not millions, just to have an hour lunch with him. So I was fortunate enough to do it in my 20s, and there was a couple of us that were there. And I remember, to your point, he said, "Hey, never." I'm totally going to paraphrase. But he said, "Never bet the whole farm." He said, "Anybody that risks everything, even if it's every once in a while, eventually will lose everything. Eventually." Right? So he's talking about probabilities. He's saying over time, you're going to be really right, but you're also going to be really wrong. And so if you've got it all on the line. So to your point, he was trying to teach us a lesson to say, not only is it, and it's not enough just to be right, but you need to have a strategy of investing that keeps you in the game, right? If any of your strategies exposes you to get completely knocked out, eventually you will, and it's game over. So you guys, from what I'm saying, is saying, hey, we cover that downside risk. We never put it all on the line. We are here for the long run. And in my unqualified opinion, I would say you guys will be $1 billion AUM in under 5 years. Given the strategy and the win rates that you guys are putting up, you guys are going to be absolutely massive. And I can't wait to hear all the success stories that you guys have, as well as many of the investors who also helped to make part of those billions as well. Kind of the topic of the show. So here we are, we're talking about risk, and you're saying, hey, Ryan, look, hey, man, the heart of our strategy is risk management. It's downside risk. It's working so well that those results, the market's down 18%. We can't anticipate the exact movement, but we're ready for it. So now here we are, you're getting like a 9-to-1 odds on monthly, and you're doing roughly about 15% a quarter. Is that right?
That's about right, yes.
This is awesome. So, yeah, you guys are amazing. So then my understanding is you have opened, or you're in the process of opening, your second fund, also Tradewind Fund. So maybe walk us through just a quick little rundown of why you're opening a second fund, what's different, why does that matter?
Yeah, for Fund 2 really is to cater for people who have a mindset of a long-term compound growth mentality.
Okay.
So what that really means is we are planning to set up a structure essentially with S&P 500 options, and we are going a little bit further out to pretend 150 to 200 days and set up a structure so that time is on our side.
Yeah.
So every single trade we do, when we initially enter the trade, has a positive theta. And what that means is as time goes by, with everything being equal, we should be making money on a daily basis. So that's the thesis on the trade. So that is the income part that will generate. But we also have to protect the downside, like we talked about. And how do we do that? Is by strategically placing different long puts, essentially, to protect the downside and make sure if there's any sort of black swan events like COVID, financial crisis, or right now it's technically not really black swan, so to speak, but if there's a 20% drop, we can live to trade another day.
Yes, exactly what Warren Buffett said. He said the people that are like the titans, like himself, he didn't say that, but I would say that, they know how to survive in any market, and that's exactly kind of an all market strategy. Would you say that's a fair assessment of Tradewind Fund 2? Yeah.
Tradewind Fund 2 is basically just like selling insurance. You collect a premium and you buy insurance to protect yourself.
I love it.
And
okay, and what's the targeted return on from your back testing? What's realistic return that you can expect out of Fund 2?
Yeah, from some of the live trading and whatnot, we expect 20 to 25% per year, and we are looking to we are raising $100 million.
Okay, so $100 million, 20 to 25% return. More of the long-term oriented type of investor, probably be a good fit there. So that's
right.
incredible.
We wanted, the first fund obviously appeals to the current market condition.
Right. High
And then we wanted
liquidity.
the second. Yep, and we believe that the next 10 years or whatnot will be a sideways market. So we wanted to design the second strategy, second fund to be a fund that can capitalize on that.
So maybe let's talk about that. So where would you say you kind of mentioned, and I teased it in the beginning about your other fund that's more focused on where the market's headed. So where do you think the market's headed then?
Well, I think the market will be sideways for the next 5 to 10 years. I mean, short term, there is no bull case right now. You got obvious war in Ukraine, Russia and Ukraine war. You got a global recession that's in development. Inflation's in everyone's mind, right? And the Fed raising rate, great. It can control the demand. Even Jerome Powell explained that the Fed can only control the demand side of inflation, not the supply side. And supply side, with no end to Russia and Ukraine, and they're a big commodity driver, especially in the wheat or whatnot. China is going through this total new lockdown. Its supply side is not looking too good. So we could expect inflation to kind of persist for a couple longer than we think. And some of the things that I think a lot of folks are not missing out there is the ports labor unions are potentially striking. That's a 22,000 union worker union, and their contract's up this summer. And if that shuts down, the entire supply chain goes into lockdown again, and we could see prices kind of go bananas.
Yes, and so given lumber. Yeah, absolutely, and pretty much every commodity and anything. And we still got fuel prices rising, which is going to affect everything that gets shipped. So, and I remember before this call, you were saying, "Hey, Ryan, I don't know if you know this, but typically historically, if you look back, there's a very observable trend, which is after runaway inflation, typically the sideways market goes for 5 to 10 years, right? And then, so you're saying that, and then you're also saying, plus, guys, we got a lot of other potential iffy things in the market on the horizon as well. Supply chain issues and other continuous inflation, other macro and micro issues that are coming.
Just the obvious stuff. It's just the obvious things, right? You got the Forex market. Look at what's going on in the Forex market with the yen and the strong US dollar. Strong US dollar, makes the world grow slower. That's the true. Emerging market won't grow as fast. And then you got the political side. We got a mid-year election coming up. And if the Republican takes back the Senate, nothing might be happening for the next 2 years. It might be a stalemate. We got an aging population. We got a lot tighter immigration policy. That means we have a tighter labor force. So it's a combination of everything. There's a reason why the market is selling up as aggressively as it is. And we can get into more of the treasury side, and the mortgage rate, but there's just no bull case, no matter what angle you look at it.
Well, if I could summarize everything, what I'm hearing is, hey, Ryan, we got this. We're paying attention. Nothing escapes your gaze. Yeah, this is awesome. And so you're saying the market's guy. Yeah, I could tell. You're saying the market is doing whatever it's doing, but again, I still picture you feet up on the desk. You're like, we're good. Like, I'm ready for this. Bring it on.
Right. Which is why we wanted to design products that it's going to be consistent, and no matter what the market does, we will be able to perform and appeal to our investor, give them that peace of mind, and the product will sell itself. They don't have to listen to us. They can just look at the results and the product and the strategies, and over time, we believe that it will be of value to a lot of folks.
That's absolutely incredible. So given where the market is headed, how have you guys positioned yourself and your investors for that scenario?
Well, right now, focus on cash flow. If you have a job, continue working your job. Do a good job, right? Because we're starting to see hiring freeze. The Great Resignation combined with this whole potential hiring freeze that might be coming, because a lot of the companies are starting to report softer earnings, and that can have potentially hurt the job market. And right now, the entire economy is getting held up by consumer spending. Travel is strong. and come on, like consumer demands are strong. And if we look at the S&P 500, the consumer discretionary hasn't really come down. That sector, Target, Costco, Walmart, whatnot, they haven't really taken a big drawdown, and that could be
Yeah.
the next sector if demands are softening, and we could see, and unemployment could affect the housing market as well. So we'll see in the next 6 months.
So okay, so my question though is, and I absolutely agree with everything you said. My question is, how is Tradewind positioned to take advantage of that current economic condition?
Well, our fund is uncorrelated, so maybe Kevin can do a better job.
Yeah, what do you think? What do you think, Kevin? I'm curious to know, right? So you guys are looking ahead. You're seeing all of these things on the horizon. Potentially, some of them might happen. Some of them might not. Maybe none of that will happen. But what we want to know is, as we know, the market responds to expectations of the future, which you guys are expecting a future. So what I'm curious, and I'm sure a lot of our listeners want to know, is how have you positioned yourself and your investors for this future scenario that you just outlined?
For sure. Yeah, that's a great question, Ryan. And David articulated in terms of what's happening really well. And obviously, we don't know if it's going to happen that way or not. No one really knows what's going to happen in the future. Sure. But how we position ourselves is, regardless of what the market does, essentially up, down, sideways, up and down, doesn't matter what it does, we are generating consistent income. And how do we do that? It's by being, they call it delta neutral, so to speak. And we have our biases, we have our way of adjusting based on. But essentially, when we enter a trade, for the most part, we have a slight bias towards the up or down. Right now, it's downwards. And we have a strategy that is taking advantage of time decay. So the theta again. So as time goes by, the time is on our side, and if the market is sideways, then we'll capture definitely all the time decay. And if the market is as we predicted, then we'll even capture the delta as well. So that just accelerates the whole consistency in income. And obviously, we again look at the risk and what if we are wrong, because we are not so aggressively swing to one side or the other. When we are wrong, we are not really wrong. So we can always adjust, and it applies to both fund. It applies to Fund 1 and Fund 2. Fund 1 is an intraday strategy. So we have an intraday bias, up or down or sideways. And then at the end of the day, everything goes either expires or we're out of the position. So it doesn't matter what the market does from there on. And then we already made our money and then we left. The second fund is where it gets interesting, because we would adjust it daily or every other day, and then we will consistently monitor the market on the macro level, and then add a little bit bias to where we think this is heading. So we have different ways of looking at it. I would say it's really a perfect scenario because we started Fund 1 as a flagship fund. It has one of the highest return and the consistency, but it also helped us understand the market dynamic on a daily basis better. You might heard this before, Ryan, it's so difficult to trade intraday because it's such a short term. The shorter the term is harder it is to predict. Swing trading, people relatively higher percentage. But if we can consistently predict short-term basis, which we so far have been doing quite good with our win rate, then on a larger scale and a longer-term horizon, we should be able to predict it relatively well as well. So on long story short, we got in some position end of April, and David expected this to go down quite a bit, not to this extent, but we expected some downside.
You were ready for it.
So we were up pretty nice. Hence I think April we were up 5% in a month. Relative to market, I think was down 5% just that month itself. So all in all, we're prepared for anything that comes to us, and then we designed this strategy especially for this type of market. But the beauty of it is, it could go back to normal. We can go to the moon or not. We will still be able to trade it.
Okay. Awesome. So here we are. You got Tradewind Fund 1, you got Tradewind Fund 2. One is short-term liquidity focus. One is long-term capital gains focus. Both are profit focused, as all funds are. And so you've thrown out a couple words. So you're delta neutral, and you take advantage of time decay, which is theta. So for those of our listeners who are just starting out, you can look up the Greeks, as they call it, in option trading. So time decay is theta, and delta gives us a measurement of the change of the position. So that being said, as we wrap up, is there anything else that you guys would like to add before we wrap things up?
Well, we wanted to recognize that none of this would be possible without your guidance, helping us walk through how to actually navigate launching a hedge fund.
Yeah.
And it really helped us launch it at light speed.
Yeah.
Teaching us how to pitch. None of this would be possible without Kevin, without you.
Yeah. And truly. Without you, I might add. Well, you're very kind. I appreciate the props. So
yeah, I might want to add real quick too.
Yeah.
And you have been amazing in many ways. It's just the style of your way of teaching certain things and sharing your information has been really impactful. It just matched our styles, analytical, but we are analytical, but we didn't have the pitch or we didn't have the way of communicating like you do. And then we learned that from you and really helped propel increase our closing rate and really launch. And I'll say because of that, we were able to launch Fund 2 and have different acceleration that is honestly, a little bit beyond what we were expecting.
Yeah.
So I appreciate you really helping us and having us on here to really share our thoughts as well.
Well, yeah, it's absolutely been my pleasure to have you guys. And if I could echo that, it's been such a joy to get to know you guys and to watch you guys grow into the Wall Street Mavericks that you are. And ultimately join me in my journey as I honestly, I try to help as many people as I can, you guys included, and now you're part of that fold. So no pressure, you carry that mantle. So be generous, go out as fund managers, but always remember where you came from. I sound like I'm your dad right now. So the dad side's coming out. Remember what you stand for. So it's been really good to watch you guys. Not only do you have a great brain, but both of you have an amazing heart. And it's just been an absolute pleasure to get to know you. And I'm sure your investors are equally thrilled. Well, that's enough for me, everybody. In our closing remarks, anticipate the markets moving, what direction you want to go, learn more about the Greeks from these guys or either online. I mean, there's wonderful amounts of information. And, the contact information will be below if you want to get a hold of these guys, just to get to know them better. Really, you guys are very generous with your knowledge. So build those skills, learn the knowledge, and even in the middle of a recession, you can put together a business so that you too can move toward your pursuit of making billions.